And in our top business story today, Abu Dhabi Ports set a new annual cargo volume record last year, surpassing the previous record set in 2014. According to the company, a significant surge in volumes was recorded last year in all major sectors, including container cargo, general and bulk cargo, roll-on, roll-off and cruise tourism, while also seeing increased investments in the Khalifa industrial zone. Khalifa Port Container Terminal handled 32% more containers from 2014, moving 1,504,293 20-foot equivalent units or containers. Roll-on, roll-off traffic had a 27% upturn, with 134,272 vehicles last year. The CEO of Abu Dhabi Ports, Captain Mohammed Juma Al-Shamisi, was quoted saying that Abu Dhabi Ports' success is due to the ongoing investment in equipment, technology and workforce capabilities. This also shows rising import and export activities related to industrial and infrastructure development projects in the Emirates. General and bulk cargo saw a 20% upswing to just over 15.3 million freight tons from 2014. And all roll-on, roll-off operations were transferred to Khalifa Port from Zayed Port last year in order to meet rising demand. Dubai and Doha remain the least expensive cities in the world in terms of building construction projects. That's according to the latest International Construction Costs Index. The findings from Arcadis, which is a leading global design and consultancy firm for natural and built assets, reveals that Doha is the most expensive city for construction in the Middle East, followed by Jeddah and then Dubai. The index, which analysed the relative cost of construction across 44 major cities around the world, finds that the local labour markets, inexpensive labour and energy resource availability have positively benefited cities in the GCC region. The findings also underline the impact of strong currency performance and the fall in the price of oil here in the Middle East. The report quoted Arcadis officials saying that throughout last year, the global construction market saw the overall level of the cost of inflation restricted due to a drop in commodity prices. And when it comes to oil, growing uncertainty over prices will inevitably have a short to medium-term impact on the GCC construction industry. With preparations for Expo 2020 increasing steadily, Dubai Airport is expected to surpass London Heathrow as the busiest airport in the world and become a major global destination, reaping in major economic benefits. The UAE's non-oil private sector ended the year on a low note, with relatively muted growth of new work being a key factor weighing on the sector. That's according to the latest report. The survey, sponsored by Emirates MBD and produced by Market, contains original data collected from a monthly survey of business conditions in the UAE's non-oil private sector. Some of the key findings showed that business conditions improved at the slowest rate in 40 months. Output, employment and input buying also rose more slowly, while charges decreased as firms competed to secure new clients. Commenting on the findings, research officials were quoted saying that the PMI data points to weaker domestic and external demand in Q4 2015, which is reflected in lower readings for new orders, employment, output and the backlogs of work. For 2015 as a whole, the average PMI was lower than for 2014, signalling slower but positive growth in the non-oil private sector. However, softer non-oil growth in the UAE last year is likely to have been partially offset by robust oil sector expansion. They added that they remain comfortable with their estimate of 4% real GDP growth in 2015, down from 4.6% in 2014. No significant changes have been recorded in the Dubai residential market in the last 5 months. That's according to the latest price index of ValueStrat. VPI's 15th of December price index registered 97.9 points, with no significant change in the value over the period. The price index was recorded across all the 26 areas monitored in Dubai, including apartments and villas. ValueStrat officials were quoted saying that this marks the first time that the Dubai residential market registered no effective monthly change since the current period of correction began after the peak in mid-2014. Compared to a 100-point base on the 14th of January last year, the Dubai villa market registered 96.9 points in December, while the apartment market recorded 98.6 points, similar to September, October, as well as November. VPI's results in November last year revealed that price-to-rent ratios recorded no monthly change, while gross yields for the same period were 5.6% for villas and 7.9% for apartments. Net yields for the same month recorded a slight increase of 4.5% for villas and an unchanged value of 5.6% for apartments.